Good evening, everyone. My name is Prkusic. Welcome to this evening's webinar. Thank you all very much for joining us. We really appreciate the opportunity to connect with you. Of course, it's always better to engage in person, but alas, here we are. We will be moving increasingly to in-person events as the pandemic continues to recede, fingers crossed. So hopefully make it onto campus in the not too distant future. The format for tonight is about a 15-minute chat through the CFA Institute, what it is as an organisation, what it stands for, the CFA program, requirements, benefits, etc. And then the second part of the session will be a panel discussion involving myself, but I also have Stephanie Batchelor and James Grigor, both CFA charter holders, joining me to chat through their career journeys to date and how CFA has been a part of that. I will let Steph and James introduce themselves when we get to the panel discussion. But just briefly, a little bit about me to start. I am a fund manager in the fixed interest team at ANZ Investments, where I've worked for 9 years, basically since university. I've been a CFA charter holder since 2017, and I'm involved with the CFA New Zealand Society board, working on the university engagement portfolio, which is why you are seeing me here today. So a little bit here about the CFA Institute organisation, what it stands for. The origins of CFA Institute began back in 1947, so a really long history. And it was when several North American associations of security analysts joined forces, basically to formalise the investment analysis and management profession and create a higher standard of education and ethics. And those professionals got together to really turn what was then a trade into a profession, providing opportunities to network, learn from each other, set professional standards. That ultimately led to the creation of local societies, which eventually became the CFA Institute that we know today. The Institute's namesake CFA program was first introduced in 1963, and it's since become the most widely known and well-respected investment credential globally. The CFA Institute mission statement includes the words "for the ultimate benefit of society." We're about leading the investment profession globally by promoting a robust and rigorous standard of ethics, education, and professional excellence for the ultimate benefit of society. And concern for that greater good is critical for an organisation that's representing investment professionals. Restoring and maintaining trust in our industry is paramount. And speaking to the industry's broader purpose, financial markets are an engine for growth. They support jobs and communities. Investment services that manage the wealth and risks of individuals effectively over time is really important. Finance is not an end unto itself. Here we've got a geographical representation of where CFA members, candidates, and their supporting societies are based around the world. So the Americas, you can see there, dominate by members, but Asia Pac, which is the region that we're a part of, dominates massively by candidate numbers. Asia Pacific has had the fastest growth rate globally for some time, and as those candidates convert to members, the membership base should grow pretty meaningfully in coming years. So this is an overview of sort of the 4 key educational programs under CFA. Most people will be familiar with the CFA program, but just to illustrate, that's not all that the CFA Institute offers. For investment professionals responsible for making investment decisions, the CFA program is really bridging industry practice, investment theory, ethical and professional standards to provide investment analysis and portfolio management skills. And the program is really seen as the gold standard of investment programs in the world. The CIPM program is about the finer details of investment performance and attribution. So practice-based skills for performance evaluation, manager selection, communication of investment results effectively. For non-decision-making professionals, the Investment Foundation Certificate, the third one along, covers the essentials of finance, ethics, investment roles, provides a clear understanding of the global investment industry. And then the ESG certificate on the far right, that's a new program. It was born out of the CFA UK. The cert offers you both practical application and technical knowledge in what's a really, really fast growing field of ESG investing. I'm actually in the middle of studying for that program at the moment. Just important to note there, it's not tied to the CFA program. You don't have to have done any of the other 3 programs to be eligible to pursue that ESG certificate. And something I also wanted to just highlight was the difference between a CFA and a CA qualification. CA is often sort of the better understood program. It deals with more so accounting, taxation, law, and audit, while the CFA focuses more on finance, investment, wealth management, portfolio analysis, etc. So the content and later career paths do differ. And also the CFA certification is valid globally, while CA isn't considered in all countries. So getting into the specifics of the CFA program. There's a quote here from the Financial Times, and it really just encapsulates what standing the CFA has. It is considered the gold standard in investment management and finance. It's a definitive mark by which to measure, competence, integrity, dedication of serious investment professionals. It has really become that industry standard. This slide here sort of highlights the key benefits from the program. In addition to the technical skills that the program will give you, it also teaches a very strong ethical grounding that carries a lot of weight in the industry. And by being a part of the society, there are additionally huge benefits around networking with an exclusive group of investment professionals. You effectively have a global passport. So here there's a bit of an overview of the core curriculum and key topics. So there are 3 key exams. The process is time consuming. The course of study is offered in a self-study learning format. So earning it doesn't have to completely disrupt your professional or personal life. The entire program can be achieved in as few as 2 years, but many candidates will schedule exams around their own personal work, family commitments. You can take as long as you like to finish the program. The results from exams never expire, and there's no limit to the number of times that you can sit for each exam. All of the curriculum materials are provided online as downloads or sent to you in the mail, so you can complete the program wherever you are, wherever you want, in the format that's most convenient for you. I would say that the level 1 exam is a lot like what an undergraduate commerce degree would have covered. At the same time, though, if you don't necessarily have, accounting and finance background, there isn't a lot of assumed knowledge. So the accounting module will take you through financial statement analysis, but literally starting with debits and credits. In economics, you'll be learning about the business cycle and its effect on economic activity, etc. In fixed income, you'll be learning how to calculate yields, the values of fixed income securities, the securitization of assets, etc. Level 2 goes significantly beyond undergrad level study, and for a lot of people, level 2 tends to be the hardest exam in terms of breadth and depth. And then level 3, for me anyway, wasn't going too much deeper, but a wee bit tangential and a wee bit more qualitative than quantitative. So candidates agree, and it comes through quite strongly in surveys, that the curriculum does focus on concepts that are really relevant and important to their professions. The content's very practical. An overwhelming majority of candidates feel that what they're learning is applicable in the real world. It's not designed to be a rote-learnt academic exam. And I certainly agree with that. In our investment team, we have a department dedicated to equities, to FX implementation, to strategy, responsible investment, fixed income, which is a team that I'm a part of. And CFA principles are relevant for each one of those teams. I will hear our strategy colleagues discussing concepts like efficient frontiers on a regular basis. And in fixed income, we're debating portfolio management techniques all the time. And of course, for anyone in a trading role, for anyone at all, having a strong fundamental understanding of what's expected from an ethical standpoint is crucial for all of us. There's also a chart there on the right just showing some salary comparisons. As you can see from that primary investment practice graph on the left-hand side, CFA charter holders are found in virtually every sector of financial markets. It's a curriculum that is broad and thorough, and so there's no real limit to the types of work that you're qualified to do. Charter holders may be focused on equities, fixed income securities, private equity, hedge funds, commodities, real estate, currencies, just to name some of the most common ones. Or you might be managing a portfolio containing some or all of those asset classes. And when you look at where the charter can take you, broken out by title, on that right-hand side, you'll see that other bucket is quite meaningful, and it's just showing that many of our members don't fit into any of the standard categories. Some charter holders might be working as traders, brokers, academics, etc. Here's just a quick snapshot of some of the top global employers of CFA charter holders. Obviously not all of those are necessarily relevant for our local market here, but it is showing you just how much prestige the CFA does have. So more and more often the charter is featured in job adverts, such as the ones here. And as these ads show, employers, they recognise the charter as the most reliable way for differentiating the most skilled and qualified job applicants, and the most passionate ultimately as well. So here's the pathway to acquiring a CFA charter. So 2 key aspects: passing the 3 exams, but also getting relevant work experience signed off. So 4,000 hours is the minimum. So if you're doing a role full-time, 37.5-hour work week, that works out to be about 2 years work experience. In terms of how long it takes to get through the exams, it is very individual, like I mentioned earlier. It just depends on, your own personal commitments, but also opportunities to sit and resit if needed. The exams aren't available just to be taken anytime. You have to take them within a certain exam window. So these are just some of the resources that are available. Just noting that the curriculum ebook comes with the registration. It's available on up to 4 devices concurrently. There's also a print book that's available. There are also some third-party providers, Schweizer is one example, that will provide a condensed sort of summarized version of the official CFA text, which a lot of candidates find helpful. And just a little bit about the exam registration fees here. So they cover the cost of the ebook. There's an interactive study planner, topic-based practice tests, mock exams. There's also a mobile study app. And there's quite a reasonable discount if you have an early bird registration. And then the CFA Research Challenge I wanted to point out as well. It's if you haven't come across it before, it's an awesome initiative that the CFA organises for university students every year. It's an annual global competition. A local company, target company is chosen, and students in teams of between 3 and 5, they assume the role of equity research analysts. So tasked with analysing and valuing that company, presenting findings to a panel of judges. The process includes an opportunity to interact directly with company management, but also to receive mentoring from leading New Zealand professionals. The outputs from that are a written report and also an oral presentation. And presentations day is always a lot of fun. Students often comment how much they took away from the experience. Some have even been offered graduate roles on the spot by members of the judging panel. So it's quite a good way to get a flavour of equities analysis, what the industry is kind of about, and ultimately what CFA study could sort of lead you to. So I would really encourage anyone interested to take part in that. I usually kicks off in about July with presentations in October. That takes me to the end of the slide, bang on time. So it's in James and Steph. Hi guys. Thank you so much for joining us today. Maybe if I just ask each of you to give us a brief introduction of yourself, your qualifications, your career pathway to date. Who wants to kick it off? Should we start with you, Steph?
Yeah, sure. Thanks everyone for tuning in. So I went to Auckland University and I studied a commerce and science conjoint. I majored in accounting and pharmacology. I then went on and did an internship at Goldman Sachs in the investment banking team, and I was offered a grad role on the condition that I went back and added a finance major to my degree. So I did that and then started as a grad the next year. I stayed at Goldman's for 2.5 years before moving to my current role, which is at Milford Asset Management. And there I'm a senior investment analyst in the global equities team. And I've been here for about 6 years now.
Oh, great. Thank you, Steph. And what about you, James?
Evening, everyone. And yeah, great to have so many people tune in this evening. So I'm much the same as Steph, except a little bit older. I went to University of Auckland. I did a finance degree, BCom, and then during that degree, I actually answered a job in student job search to literally empty rubbish bins in the Coopers and Lybrand building, which is now the ANZ building. And that was my dream to work in that building, because at that point, it was the tallest building in Auckland. And so I did that while I was at university. And that sort of led to my graduate role. Must have emptied those bins really efficiently, because then I got a graduate role in 2004, same as Steph though, on the condition that I did some postgrad study. So a little bit different because I'd already done finance. And so I started a master's in statistics, and after 1 year, it was a bull market. They didn't really worry too much about completion, and I reluctantly left university to join full time. Did a number of years there, went to London for 2 years and ended up staying 8 years, and then back to New Zealand to head up the, I guess, portfolio strategy group at Macquarie Private Wealth, which led to a full circle back to NZ Funds to become a portfolio manager, and then a few years ago became the chief investment officer. I did my CFA in 2004 is when I started. And as Mia mentioned in her presentation, while I'd done the 3 exams and passed them, it was a couple of years until I actually got the work experience to be able to actually have the designation. But I guess the learning from all that was that doing the CFA at the start of your career, not the middle of your career, was a really, really good piece of advice I got from my mentors, because the less responsibility you have at work, the more time you can put to study. So that's me, and it's I'm sure we'll talk about some of the benefits. I'll pass it back to you, Mia.
Thank you. Yeah, and I guess just from my point of view, I gave a brief introduction at the start. Just to add that my undergraduate degree was a Bachelor of Commerce in Accounting and Finance. I actually started the Finance Honours program and did a couple of papers towards that while still at undergrad level. But I felt that the program was sort of really, really academic and theoretical. And then I discovered a CFA at the similar time and decided to pursue that instead. And I could work on that while starting in the workplace rather than sort of prolonging my time at university. And definitely think that was a good decision looking back. So next question, just if you could both kind of detail what your current roles entail or what a day in the life would look like for you. You can stay with you, James, if you like. Or
Sure. So my day is twofold. So I run a global macro hedge fund. And so unfortunately, that involves a lot of US and UK hours. So my day starts lazily in the morning, where I do the get the kids up, or see what's happened overnight in markets. I've probably been up quite late watching the Open anyway. Get up late, not that late given my kids are young, get them fed, get them off to school and roll into the office about 9 a.m. The day, I always have a philosophy that all your thinking should be done in the morning, because that's where you're freshest, that's where your mind is most focused. And so that's when I work on the portfolio that I manage. whether that's going through research with the analysts, discussing the macro environment, discussing what markets have been doing in the short term, especially in times like we're facing now. And then as I go through to the afternoon, it's more working with the portfolio managers of the other mandates we have, whether it's New Zealand equities, Aussie equities, global equities, our income portfolios, not to necessarily test the portfolio managers, but provide that sounding board of the different things that they're looking at and the different research that they've done, as to give, I guess, a second opinion, because I think in this type of work, it's all around confidence, and it's all around challenging what the market's thinking, because in the end, you want to be different from the market in order to generate a return. We roll into sort of in the evening around about now, where we're starting to prepare in the portfolio that I run again, unfortunately, into US and UK hours, and so start thinking about what the day has in store for you in terms of positioning. But again, go home, have dinner with the kids, and then and this is where the passion has to come from in finance. So after we have a really nice family time, it's back to markets. And again, for me, I'm unfortunately a morning and a late in the day type of person. So again, a lot of reading and research is done in my evenings, and sort of preparing for, I guess, what's to come in the markets. The other part of my role is, given I'm on the executive, is sort of more around the business. That part is really exciting because it gets you out of the flow of what's going on in markets, but but really the passion comes around what's going, in the portfolio, what we're investing in, the different asset classes, and the research that in the 18 years I've been working, that really hasn't changed. That's where the excitement comes from. Steph, back over to you.
Yeah. So a day in the life. I'm going to have to go with the cliche of no 2 days are the same, which I'm sure you hear from everyone. But I guess my primary focus is understanding, researching, and valuing global companies. So, I really love what I do. I get to look at some of the most successful and innovative companies in the world. But there's a lot of variation. So, for example, right now it's the US reporting season, quarterly reporting season. And so that's when all of the companies report their earnings results. And so for us, it's a lot of analysis, a lot of focus on what the companies are saying, and then how that, whether that changes our view on any companies that we might own. In between earnings season is when, we might be doing deeper dive pieces of research. It might be a new industry, it might be a new company, or it might be just better understanding some of the current portfolio holdings that we have. That's kind of very company specific, but it could also be on, for example, a broader macro trend. So right now, trying to understand sort of the health of the consumer, and is that a risk going forward for any of our companies or positions. Pre-COVID, when we were able to travel more easily, we would head overseas, we'd attend conferences, and we would meet companies, face to face, whether that's the US, Europe, Japan, China, which is obviously a really exciting part of the job. And so hopefully we can resume that soon. And then I guess lastly, there's also an element of marketing for us. So it might be presentations to clients, it might be like a radio or a TV slot, it could be writing blogs. So all things that can kind of help communicate Milford's views and really help to keep our clients up to date. So there's a lot of different parts, but the core is really just researching, understanding and valuing global companies.
Awesome, thank you both. And I'll just add sort of my perspective as well. I'm on the fixed income side. My role has really evolved. I've spent 9 years at the bank, pretty much since university, and 7 years in fixed income. So my role has definitely evolved over time. I sort of started out managing our cash fund, which is the primary source of liquidity for our entire fund suite, and I was also doing some high grade company credit research alongside that. Since then, my focus is more on sort of the lower quality credit, so down the credit rating spectrum into the BBB space, as sort of new members of the team are focused on that A- and above area, and also just managing our flagship credit funds. So we manage about $2.5 billion across those. So it's everything from accommodating any asset allocation moves from our strategy team, looking at any primary market opportunities, looking at relative value trading opportunities. So the role is very dynamic. It's very varied, but still a specialized fixed income role. And also I have responsibilities on sort of wider investment committees. We have a monthly markets forum that we attend, present a paper on our fixed income view that's robustly sort of debated around the table. And also Credit Council is one that I'm really involved with, where all of our analysts will bring a company report to every meeting, whether that's initiation on a new name or an update on an existing name that we're already invested in. And we will come to an agreement as to whether our internal rating on that company, remains the same or whether it needs to change. Yeah, so let's move on then to the next question we had, which was, how relevant would you both say, Steph and James, your CFA study was to your current role and the roles that you've had to date? How would you say that what you sort of learned in your study, you apply day to day?
Yeah, I can jump in. Yeah. So my CFA journey only started after I had joined Milford. So I was working in the industry while I was studying the content. And for me, that was really helpful because I could put into practice everything that I was learning. So it helped me to better make sense of the content, and it also made my study more effective too. So I thought it was really helpful doing CFA while working in the industry. In terms of the relevance, I'd say it's been incredibly relevant for my role. The equity investments topic is essentially what I do day to day. So I utilize, the qualitative and quantitative aspects, the valuation techniques, but it's also more broad than that. Like even the top-down macroeconomic side of things, that's critical to markets. Even smaller topics like investor biases, I think super helpful to understand, because if you're aware of them, you can kind of catch yourself and think, was that a bit of confirmation bias there? Or, if you're in a close-knit kind of trusted team, you might even be able to call others out if you see some of those biases creeping in. Level 3, which is all about portfolio management, that's obviously, incredibly relevant to funds management. But even the wealth planning section, so, I'm not a financial advisor kind of working directly with clients, but that is a big part of Milford. And so it's helpful for me to have an understanding of, the wealth management side of things too. So very relevant in terms of my direct day-to-day, but also that broader picture, and having that bigger picture understanding, I think, is really helpful.
Thank you.
I think Steph really said it all then. I think that the relevance is really can't be over emphasized. A good example, right now we've got an environment where there's high inflation, increasing interest rates, and lots of volatility. So different managers deal with that in different ways, and no way is the right way. There's just lots of different ways you can deal with that market scenario. The way that we're looking at it is we are using options to sort of protect the downside risk of equities. With interest rates increasing, we're thinking the way that we manage our duration risk or our interest rate risk is around shorting 10-year government bond futures contracts. And the way that you can manage volatility is think about, in equity markets, is think about other asset classes, for example, commodities, or dare I say it, cryptocurrency, which for those of you that know NZ funds, controversial or not, we invest in cryptocurrency. And going back to what Steph was saying about travel, I actually managed to get my first trip in 3 years, where I went to the US to go to a cryptocurrency conference where there were 30,000 people, which was quite amazing, but definitely an amazing part of the job in terms of the people you meet. So I think in direct investing, huge amounts of relevance, and then reflecting what Steph said around most fund managers or investment managers in New Zealand, the distribution or the clients are gained through financial advisors. And to have that whole piece around financial advice and how a mum and dad client, is what the industry sort of calls them, thinks about taking risk and asset allocation is really helpful, because at the end of the day, the journey that your clients go through is the journey that you give them through how you invest. And so having your sort of one eye on that while you're still managing the investments, whether it's equities or bonds or other types of asset classes, is really important. So I think it's really practical. Don't get me wrong, you're sitting there in level 2 studying pension accounting can be a really difficult moment in life, but actually when you reflect on it, it's a really practical, relevant type of study that you will be using every day if you're lucky enough to be in the industry. And I guess the final thing I'd say is that university is also really relevant, and what you learn at university is perhaps a bit more academic in some ways, but gives you that really great foundation. And so when you then roll from university into the CFA study, it's sort of a natural progression. Level 1 is almost like a review, and then level 2 and level 3 is taking those sort of step further. And I think it sort of fits really nicely in that respect. And so I think for those that are studying it now or thinking about studying it and thinking, is this going to benefit my career if I'm thinking about one in finance? I mean, absolutely. We all probably use it on a day-to-day basis.
Thanks, James. Yeah, some great examples there. And I guess I'll come at it from a slightly different angle, in the sense that I wouldn't be in my current role without having earned the CFA. The industry's gotten to a point now where, unless you're very senior with sort of decades of experience, the charter has become more or less a prerequisite. When ANZ Investments is hiring, our role mandates say CFA preferred, but the reality is that, you know, most of the CVs that we're getting across the desk already have CFAs or are working towards them. So it does unfortunately make it quite easy to sort of prioritise the candidates that do have their CFAs. And the CFA just says a lot about a candidate. It's a process, as you will have seen through our presentation. It's a high bar. And while getting through the program is tough, it's also the reason why the qualification is just so highly respected. You know, if you're willing to commit to 300 hours of study times 3 across the 3 exams, then you don't really have to spend a huge amount of time or effort communicating, you know, to a prospective employer your interest in the field. Yeah, okay, I've got some examples, but I think we've sort of covered this one off in terms of just the day-to-day and the application of the CFA in my world. Maybe if we just touch on sort of what other benefits would you say earning the CFA charter has given you? You know, marketability to employers, which I mentioned being one, but just, yeah, any other sort of benefits that you've noticed?
I can probably kick off with that one, and it's sort of related to the employer. But when I moved to London, I moved in 2009 after a year of travel. And so if you put yourself in that position for a second, imagine moving to London in June 2009 during the height of the financial crisis and handing out your CV. It was pretty difficult. I think the day I arrived in London, 10,000 people got made redundant from, you know, 2 investment banks. I mean, it's and so you need, not that I'm suggesting it's only good in a difficult market, but it really does help when you're applying for different roles, especially in different countries. Experience can go a long way. I had 5 years experience as an equity analyst, researching stocks and having a great track record. But how do you convince an employer or even a recruiter to think about your experience level during a difficult market, when they're kind of unsure how the New Zealand market works? And what the CFA does is it really baselines you with every other candidate from all over the world. And so all of a sudden you're not at that disadvantage by being a bit different, by being from a different country. And so those that want to travel and work overseas, it provides that really nice balancing item and enables you to, University of Auckland, Oxford, UCL, and, all the American universities, or wherever you decide to travel. If you've got that CFA, it baselines you with everybody else. And I think that's was really helpful for me. And when I look at candidates now, and we do get a lot of candidates from overseas, if they've got that CFA, it also helps in that recruitment process when people come to New Zealand.
Awesome, thank you.
Yeah, the only thing I'd add, I guess, from sort of, so I've been involved in some of the kind of intern and graduate recruitment processes, and obviously I don't think there's an expectation that you'll be, a full CFA charter holder coming out of uni, but I think when I see a CV that has someone who is enrolled or maybe has level 1, or even just in the cover letter, stating an intention that they will be looking to get CFA, that does stand out as someone who is really interested in finance and the industry, and someone who's, passionate about ongoing learning. So I think, you definitely don't need to come out of uni with being a full CFA charter holder, but having that intent, I think, goes a long way when you're applying for jobs. And certainly if you're looking overseas, then as James mentioned, it does help to level the playing field. So whether that's earlier on in your career or later on, it would definitely be valuable.
Thanks, Steph. Yeah, echo all of your thoughts there. Going through the program, earning the charter, it does bring you into a network sort of with peers in your industry. And that leads to all sorts of benefits around, mentorship opportunities, job opportunities. Also just taking advantage of continuing education events, conferences that are organised through the CFA Society. It just helps you stay abreast of, trends that are affecting the industry in your market, etc. We are at 6:40. We have a bit of time for questions, so you're more than welcome to post a question. I've got a few that have come through. First one, I am a second-year uni student majoring in finance and minoring in economics. I'll graduate at the end of next year. Do you recommend me to start preparing for the CFA Level 1 exam? Also, do you recommend to do the ACCA exam as well? Anyone want to tackle that one?
I think, my view, I don't know, and I'm sure everybody will have different opinions. I think you should focus on university, and when we're going through a recruitment process, we will look at your marks at university, and we'll look at exactly what Steph said around intent to do CFA, but don't put your university studies at risk by trying to do too much. There's plenty of time to do CFA. It's really hard in terms of the time. CFA is not, my view is, and I'm not the A+ student like I'm sure Mia and Stephanie are, but I managed to get through the CFA. But it's not so much difficulty of subject, it's quantity of work, and you just have to put in the time. When they say you need to study 250 hours, you need to study 250 hours, and that's going to be, unless you have no life outside your 8 papers, whatever you do at university, that's pretty tough to do that on top of that. So I would focus on university, and it is what you're learning at university, especially if you're in accounting and finance and stats and mathematics, that's going to help you with your CFA study anyway. But the one recommendation I would have is don't delay it. The sooner you can roll straight out of uni into these CFA exams, it's hard. And the thought process of doing more study can be quite tiresome, but it's much easier to do it at the start of your career than, I've seen people in NZ funds do it when they've got a young child and they've got a high pressure job, and yeah, that would be tough. That would be my view.
Yeah, and I think just one thing to add is that I found it super valuable doing it while I was working in the industry, because while you're studying at university, you're learning all the theory and everything, but I found it quite hard to actually put that into context of how would I actually apply that in a job. Whereas once you're working in the job, the content kind of makes a lot more sense, because you're going, oh, okay, that's what I was looking at last week, or this is how I actually do a DCF in real life, and what the implications are. So I think it actually helps to do it while you're working. But if you're really keen and think you can manage both, then by all means go for it. I don't want to put you off, but
I'm trying not to
my
put
recommendation.
people off either, but I just think
it is a lot of work. Yeah,
a lot of work.
Yeah.
I'm an inefficient studier though, so.
Yeah, absolutely. And discipline around a study schedule. My experience at every level was quite different. So I did level 1 while I was still studying actually undergrad. I did level 2 when I was sort of still going through my grad rotations, and level 3 I was in a permanent role with a lot more responsibility. I was actually in a permanent role while on secondment in the fixed interest space, where I ended up getting a job and also studying at the same time. So that was a lot to be grappling with all at once. But it does seem like those first couple of years in grad roles are the sweet spot to really get stuck in. There's another question here. Are job prospects still very good for candidates who have passed all exams but still need work experience?
To be honest, if you passed all 3 levels, I think the work experience is just a tick box exercise rather than a necessary hindrance.
Yeah, you've put in all the work. I would definitely agree with that. Can you provide more detail on the job of an analyst, particularly how it might relate to statistics, data analysis skills?
I guess it depends what kind of analyst you are, doesn't it? So whether you're sort of an economics analyst, or whether you're a fixed income analyst, or whether you're an equity analyst. So I guess for me as an equity analyst, I don't necessarily use statistics as much. Like my go-to tools would be, well, first of all, there's a lot of qualitative, like in equities, you really need to understand the company, you need to understand the industry, the opportunities and the risks, ESG factors, all of those qualitative things. And then to actually come to evaluation, my typical tools would be, a DCF analysis, a multiples analysis, or a comparables company analysis. So those would be kind of the go-tos for me on equities. But I guess if you're more in a kind of a macroeconomics analyst role or fixed income, I don't know, you might be able to add to that, Mia. Yeah,
I guess from my perspective, it definitely depends, what area that you're in. Our strategy team, they're very much, they're in MATLAB, they're coding, they're often, engineering or mathematics background. We've got 2 that have actually got maths degrees. So they'll be doing a lot of that statistical sort of data analysis. It's quite a bit of technical analysis in that space. Whereas in fixed income, I would say it's quite different in fixed income in New Zealand versus fixed income in a deeper, more liquid market. Like, for example, in the US, you probably would be doing a lot of quantitative type analysis as well. In New Zealand, just being so small, our yields get moved around just on flow, buy, sell. When we have a large hedge fund that comes into our market, that just moves us around. And so you can do all of the technical analysis that you like, but ultimately it won't actually give you the signals that you're looking for, like it might in other markets. So it depends, is the answer there. Regarding the work experience that's part of the CFA Charter program, does it have to be in investment banking, or just lost my place?
Sorry, I answered I got rid of the questions, but we answered, so I mucked it all up for you, Mia.
Oh, that's all right. I think I've lost that one, unfortunately. Might have to come back to it when I spot it again. With regards to life after completing the designation, would you say you get back time to do your own interests and hobbies?
Yeah.
Depends on the job.
Yeah.
It depends on the job. I mean, James, you sound like you're working a lot, and you've obviously got family commitments and things. I guess it definitely depends on the role. Like, I know when I was doing investment banking, there was no way that I could have done CFA at the same time. Like, investment banking hours were kind of crazy. And there were a few people who did it, and I absolutely take my hat off to them, because I couldn't have done that. I guess my first few years at Milford, it was a bit difficult because you're not only learning a new role, but you're also studying CFA. So your time is very much taken up. Whereas since finishing CFA and feeling more comfortable in my role and, you know, progressing further along, you know, I'll be working kind of probably 8 till 6. So reasonably kind of normal hours. Every now and then I might need to do a late night call with a company in Europe, or some weekend work to prep for something. But really, I mean, my life is pretty much back to normal, and I can have hobbies and all those nice things. So there is a light at the end of the tunnel. Do not worry.
I totally agree, Steph. The way I think why there's so much passion in this industry is one, and I don't want to speak for Mia and Steph, but the fact that they're presenting as well tells me that they feel the same, as that, like, I love my job, and what you get to do is so interesting. You get to delve into different companies or asset classes and learn as much as you can from them. So I can tell you more about corn and the global supply and demand dynamics of corn than I could ever thought possible if you asked me about it 2 months ago. And I get paid to understand really interesting asset classes. And the other part of it is markets are 24/7, but it means that depending on your employer, but ANZ and Milford and NZ funds are all pretty similar in that they want to attract good people. And I'm sure, the industry is like that, is the flexibility to be able to do the work when it suits your brain function, and if it's mornings or evenings or whenever it is, means that it really suits lots of different types of people. And it means in the morning, I love getting up, going for a run up Mount Eden, getting a coffee, coming back, making sure I do the school drop off. That's what's important to me now. 10 years ago, it's probably slightly different, obviously. But it's the flexibility of the industry is really really beneficial. I think there's certain parts of the industry that aren't. I think those that go down the investment banking route, we've got an ex-colleague of Steph and my team, and he's the same. He's got his CFA level 1. Tried to do 2 and 3 while doing banking, and thought it was an impossibility. So there are certainly parts of the sector that aren't, but I think everybody will find their place who wants to work in it, and will be able to do what they are passionate about outside of work, but also remembering that work is kind of a bit of a passion in finance, because it is really interesting and exciting.
I did find the question that we missed off earlier. So regarding the work experience that's part of the CFA Charter program, does it have to be in investment banking, or can it be in an accounting firm or a private wealth advisory company?
Yeah, I think there's a couple of questions in there around the work experience. I think, Mia, you might know more than me, but I think it can be in any kind of role where you're utilising some of the CFA content. So it would definitely include, I would say, accounting, definitely investment banking, probably assurance, like all of those ones. You just really have to kind of have, I think when you apply, you have to kind of fill out a little form that kind of describes how you've utilised your CFA learning. So it's quite a broad range of roles from memory.
No, yeah, definitely agreed. And I actually, before joining ANZ, I had 2 internships with Ernst & Young in assurance, and that was all signed off and included in my work experience. So it's definitely not just investment banking.
I worked for the Department of Energy in the UK, looking at liquidity in wholesale electricity markets, and it counted towards my yearly sort of work experience for CFA, once you get the designation. So I think it's relatively flexible, to be honest. If you're a ski instructor, you might struggle a little bit, but apart from that, you're probably going to be, if you're using your brain, you're probably going to be okay.
Yeah. Cool. We've got another one through here. Does being a CFA usually come with a pay rise, or would it put you in a higher salary band? I guess I would say, to answer that question, it's not sort of an automatic, it's not like a licensing that you achieve and then automatically step into a different pay scale. But I would say that the sorts of jobs that a CFA naturally leads you into, might typically are in a higher salary band. They're jobs that involve taking risk, which usually do come with a higher remuneration as well.
It would be great if you did get an instant pay rise once you completed a little bit of extra motivation, but yeah, I agree with what Mia said.
We have time for a couple more. Next one here is, I have an engineering undergraduate degree and want to enter the finance field. Do you think I should complete postgraduate finance or focus on CFA self-study?
Yeah, and there's another one about, a lot of people having more than one major or more than one degree and whether that will help in a future career. And I'd say, I think increasingly the finance industry is looking for non-finance people. So, for example, someone in my team was a doctor. And we've got engineers, Mia said, people with maths degrees. And I think having that broad range of kind of background and a different way of thinking is incredibly valuable, because it allows you to look at something in a different way than someone who's just studied finance and accounting might. So I think increasingly companies are looking for people with a broad range of kind of interest, background, study, all of that kind of thing. So I think it helps to kind of set you apart, but I also would say it's not, it's definitely not a prerequisite. You don't have to have a double degree or multiple majors or anything like that.
Yeah, I agree. I think what the CFA does is sort of, again, what we talked about, baselines you, but whatever your background is prior to that, I think is of interest now. One CV I got over my desk the other day, and I'm not making this up, it was a relatively standard, if you will, CV, really good, really smart person, good degree, I think computer science and maybe accounting. But the thing that took my interest in, you can write anything in your hobbies. And, I probably wrote sports and running or something boring. This person wrote, I like playing PC computer games. And I want to know what that means. What do you love about it, and what game? I don't even know what a PC computer, I don't even play computer games. So I want to know what that type of person is like, how they think, because it's going to be different from me. And I don't want to hire a whole lot of me's. I want to hire a whole lot of different people. So I don't know where I was going with that, other than I think the variation of background is really important, and doesn't less like sort of generations past, where you sort of do a degree, you become an engineer, and you be an engineer at the same firm for 40 years. That type of thing is passed us by, and it's around lots of different experiences.
Cool. I'll try and find one that's a little bit different. There's one here. Hi team, just wondering what level of support you got for your CFA. Did you have some form of tutorship from your employer, or was it mostly self-taught?
For me, so Milford paid for the CFA, which is obviously helpful, and it wasn't necessarily, there wasn't any kind of tutorship or anything, but my team is great in that if I was studying something that kind of didn't make sense, or I wasn't quite sure, I could go to any of them and ask, and they would willingly give up their time to help me out. So I guess there's that aspect. And then Milford also gives kind of study leave, so kind of paid leave for study, so you don't have to necessarily use your annual leave or take leave without pay. So that's also really helpful. So that was probably the support, and also just an understanding that you might not be able to do late night calls because you might be studying, or don't overload me with too many to-dos on my work to-do list, because they know I'm also studying for CFA. So it's kind of that support. Everyone sort of knows that it's a huge time commitment, and so that's very much appreciated by most employers, I would think. Yeah, I don't have anything to add to that. I think that's exactly right. And if you join a firm with people with a CFA, they understand, and I think that last point is really important, but study leave is really important, as is if you can get your employer to contribute to the cost, that's always helpful too.
And then the fees afterwards.
Yeah, definitely. Yeah, I had similar sort of support from ANZ as well. I would say around kind of building your own support network. There are some study groups that the CFA organises, but also people just organise them with peers that they know are going through the program at the same time, which is a real comfort to kind of, be sharing in that experience with other people, and even, topics you might be finding hard and working through them with someone else. And there's also, well, pre-COVID, there was a mock exam that the CFA put together out at Massey Uni. That was quite a good kind of trial run under an exam condition. That's been a wee bit disrupted with COVID, but I'm sure that will return in time. That's probably us. We're at time. So yeah, I'd like to say thank you so much for joining us, taking time out of your evening. Thank you so much, Steph and James as well. Really, really appreciate joining the panel. And if you have any further questions, please just email me or Kylie, and we'll make sure we get back to you.
And more than happy for people to, I'm sure you can work out what my email address is. And if you can't, then but your analytical skills need some work.
Yeah, just come to me and I'll get you in touch.
And I'm more than happy to talk with people.
Thanks for organising, and thanks for all the great questions as well from everyone tuning in.